House prices fall at their fastest pace in 40 years. The Jobs and Skills Summit kicks off with the government announcing 180,000 new fee-free TAFE places and plans to alter rules around enterprise agreements, and how the pandemic has changed dining habits. It's Friday, the 2nd of September 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Now, did you see much of the Jobs and Skills Summit yesterday?
I feel like this is a trick question.
No, it's not.
Okay,
it was
good.
actually really entertaining. I mean, the content itself was good, but just to see all this disparate group of people, unionists in high-vis outfits, standing next to politicians, standing next to really senior business leaders, it was great.
Yeah, it is great. And when you can actually see kind of productive conversations taking place, it's why I like it whenever you see kind of a little bit of bipartisanship in politics as well, just to see that, hey, actually opposing sides can come together every now and then and make something a bit productive.
Yeah, I think so. It's a spectacle. It really was impressive.
Yeah, well, we'll be chatting a little bit more about that in a little bit. We've got a few things to get through first, Sean, including a massive lead story, which is actually the subject as well of our interview today. You're speaking with CoreLogic's Tim Lawless.
Yes, our lead story today, of course, is all about house prices and what's happened over the past month and the past year, and the numbers come from CoreLogic, and Tim Lawless runs us through them.
Yeah, it is an extraordinary statistic that house prices fell at their fastest rate in 40 years last month. I find that amazing, although the pace of declines in Sydney and Melbourne is flattening out a bit.
Yes, now Sydney's house prices have fallen by 7% from peak to trough, which is a collapse, according to Commonwealth Bank economist Gareth Aird. Melbourne is down by 4.6%. Brisbane prices slumped 1.8% last month alone. Incredible. And even Adelaide, previously the shining star of the capital cities, went backwards during August. Across the country, prices were off 1.6% last month and are 3.5% below their highs. House prices are falling faster than apartment prices. Remember, they rose faster as well. And every capital city, with the exception of Darwin, is now going backwards. Regions are also going backwards. The main reason is pretty simple: rising mortgage rates. Although there's a bunch of other considerations, including falling consumer sentiment, housing affordability, cost of living pressures, a shift from spending on goods to services, and the number of properties up for sale and buyers in the market. Now, that latter fact was highlighted by the Australian Bureau of Statistics yesterday, which came out with figures showing new home loans fell at their second fastest rate in 20 years during July, albeit from very high levels.
I think, though, Sean, the question for most of us, whether we own a home or whether we're actually just looking to buy, is how much further house prices are going to fall.
Well, that's, as you say, what we all want to know. AMP Chief Economist Shane Oliver reckons peak to trough prices will fall between 15 and 20%. That would be one of the biggest falls in many, many decades. In fact, downturns over the last 25 years have generally been less than 10%, so they've been rather mild. Dr. Oliver argues it's different this time around because households are more indebted. The economy has reached an end of the long-term decline in interest rates, and the home price to income ratio has risen sharply, i.e. house prices, compared to the money people are bringing in, is much higher than it used to be. The argument against a large decline, perhaps a drop of no more than 10% or so, revolves around the savings buffer built up during the pandemic, an unemployment rate of 3.4%, and an economy that is still expanding, and really expanding at a pretty good clip. The main determinant, though, really is how much further interest rates will rise.
And of course, Sean, it's worth keeping things in context because house prices did run hard, really hard, before the current downturn. So most homeowners are still much better off.
That's right. The market was up 28.6% between September 2020 and April this year, and now average property prices have fallen by 3.5%. So that puts context around that. Now, they have fallen by more in Sydney and Melbourne, though those cities also rose by more. Homeowners are still substantially better off than they were before the pandemic.
Okay, look, moving on from property now, what happened in local markets yesterday?
Well, bad day on the markets. The S&P ASX 200 fell 2% to close at 6,846 points, its lowest close since late July. A few things going on. Sentiment about rising interest rates and a possible recession is hurting commodity prices, and that includes iron ore prices. That sent material stocks lower. But really the big one yesterday, BHP traded ex-dividend, meaning anyone that bought shares yesterday weren't entitled to a $2.56 per share final dividend. Now, that sent its share price down 7%. That's all fairly normal when a company trades ex-div, but that certainly pulled the market lower. Other companies to trade ex-dividend yesterday included Macquarie Group, Whitehaven Coal and AGL Energy. Among the large caps, the banks all fell, led by Westpac, which dropped 1.6%. Fortescue was down 3.5%. That's on the back of those lower iron ore prices, while Woodside, Goodman Group and Aristocrat Leisure, a fairly eclectic group, those three, they all fell around 2.5%. Gaming group PointsBet can't find a friend at the moment. Its share price fell more than 15% yesterday. Sandfire Resources is another company to be sold off since its results. It dropped 11.5% yesterday. On the other side of the coin, Liquor Group Endeavour and the A2 Milk Company were the best on the day, both up 2.6%.
Isn't it nice, after all the problems that the A2 Milk Company had over such a long period of time, to be able to say it was the best on the day?
It is, and that hasn't happened much in the last 2 to 3 years.
No, it certainly hasn't. International markets, what's happening?
Well, it's worth checking in on how different asset classes performed on Wall Street, because August was an incredibly poor month. Every major asset class slid, according to Bloomberg. The least atrocious, as it puts it, the least atrocious return was a 1.9% loss, as shown in a Bloomberg index tracking high-yield corporate bonds. Worse was a 2.2% drop in US Treasuries, that's fixed income, a 3.9% decline in commodities, and a 4.2% slide in the S&P 500. In fact, the last time the best-performing asset went backwards during a month was in December 1981.
Sorry, I'm still laughing about the least atrocious. It's not exactly a glowing endorsement, is it?
No, but 2% in a month is a big fall. You know, you annualise that, that's 24%. And that was actually the best of the lot.
Oh, wow. All right, there we go. We'll be back in a moment with the rest of the day's business news. Sean, in the political world, it was all about the Jobs and Skills Summit yesterday, with 142 representatives of business, unions, government and the community meeting to try and find consensus on the way forward in labour relations.
Yes, the goals are to improve wages, improve productivity and improve the industrial relations system. Some of the concrete development yesterday's include the creation of a tripartite national construction industry forum to deal with mental health, safety, training, apprenticeships, productivity, culture, gender and diversity. Also, federal, states and territory governments will create 180,000 more fee-free TAFE places for 2023 at a cost of $1.1 billion. That was a very concrete announcement. And work will start next week on amending the Fair Work Act.
All right, I imagine there's a fair bit in that. What's it mean?
Well, the government wants to allow for multi-employer bargaining with an emphasis on small business, women, care and community services sectors. It also wants to make the Better Off Overall test, better known as the BOOT test, simpler, more flexible and fairer. It wants to strengthen the power of the Fair Work Commission so it can intervene in bargaining that it's gone on too long or where one party is acting unfairly. Sounds sensible to me, that one. It also wants to provide stronger access to flexible working arrangements and unpaid parental leave, and it wants added protections for workers against adverse action, all forms of discrimination and harassment. All those factors are quite a big change to the Fair Work Act.
All right, you mentioned that you kept a pretty close eye on this yesterday. What do you reckon the mood has been like?
Well, from all reports, pretty convivial. There were some great photos of unlikely allies sitting next to each other. So Greens leader Adam Bandt was next to Fortescue founder Andrew Forrest. I wonder what they spoke about. There's also a great photo of the heads of the Australian Council of Trade Unions, the Business Council of Australia and the small business peak body COSBOA, those three all together. And one of my favourites was actually the Queensland Premier Anastasia Palaszczuk, New South Wales Dominic Perrottet and Daniel Andrews from Victoria, all sitting together. Unfortunately, someone did snap a picture of the New South Wales Premier who appeared to be having a nap at the time. But Let's leave that.
Yeah. Yeah. All right. Unfortunate photos aside, Sean, there were plenty of interesting kind of side conversations and a few facts and figures and things to emerge from the summit.
Yeah, I agree. Atlassian Chief Executive Scott Farquhar said his software company will hire more than 1,000 people in Australia and New Zealand in the next year. He said Australia is 186,000 jobs short of the 1.2 million technology jobs needed by 2030. That was a really fascinating stat. A senior research consultant from CSIRO said only 14% of Australian jobs face the risk of being replaced by automation, but she said many more will be affected. I loved Equality Rights Alliance's Helen Daly-Fisher's line that Australia can't keep asking women to babysit the economy. Of course, she was referring to the need to improve female participation rates. And ACTU President Michelle O'Neill made the very interesting observation that the Hawke Government's Summit in 1993 had 97 attendees, of which one was a woman. Yesterday, more than 50% were women.
Oh, that is... Who was the woman in 1993? This will put you on the spot.
Susan Ryan?
Okay, so you're going to lock in Susan Ryan. I'm going to check that out. I will Google it. I'll come back to you in a few minutes with the answer, Sean. Stay tuned, as we say.
Okay.
All right, now moving on from the summit, Rio Tinto, Sean, has won support of the board of Canadian group Turquoise Hill Resources and will pay nearly $5 billion for the 49% of the company it doesn't own.
The buyout clears the way for Rio to work with the Mongolian government on developing a major copper mine in that country. The pit mine in the South Gobi Desert contains copper, gold and silver. Now, the price Rio is paying is 20% more than the initial offer from the mining giant. The acquisition, which remains subject to a shareholder vote, means that Rio will hold a 66% interest in the Mongolian mine, with the remaining 34% owned by the country's government.
Sean, businesses pulled back their investment plans last quarter, in part due to the weather, but plan to spend up over the next year, which is obviously good news for the economy.
That's right. The Australian Bureau of Statistics capital expenditure figures. Oh my God. Have you ever looked at those, Michael? Probably not.
I can honestly say no.
Well, I have, and I have spoken to Stephen Koukoulas about this. I find them some of the most dense of all economic statistics to look at. Anyway, I digress.
You're really not convincing me to go and check them out. I think I will just rely on you to do the hard work, as I always do.
Well, these CapEx figures showed a fall in spending during the June quarter, though spending on plant and equipment actually rose fairly sharply. The figures feed into the quarterly GDP figures, which are out next Wednesday, and the view among economists is that the nation expanded at a 3 to 4% clip last financial year. It's not bad at all. The good news from the figures is that businesses have revised up their plans to invest this financial year, particularly in the services sector.
Okay, a little bit of banking news. Sean, two of the country's smaller banks, Heritage Bank and People's Choice, are set to merge.
If successful, it will create the country's ninth largest bank. It's now up to Treasurer Jim Chalmers to make the final decision. Queensland-based Heritage and South Australia-based People's Choice would have a combined membership base of about 720,000 and be the largest mutual bank with loans of about $23 billion. To go through, 75% of members voting need to approve it. Now, some of the smaller banks are being sold off or reconsidered by their owners at the moment. Suncorp recently sold its banking operations to ANZ for almost $5 billion. Challenger said it was undertaking a review of its bank.
And just while we're on the topic of mergers, Sean, Australia's two largest financial planner associations are looking to merge.
We love financial planners on Fair and Green.
We do.
Always telling people to go and see one. The Financial Planning Association of Australia and the Association of Financial Advisors have signed a memorandum of understanding and will now seek feedback from members. The two associations said they see substantial synergies from a merger, providing a united voice.
Okay. Now, we mentioned this one at the top of the show, Sean. We are now in what you would call the post-COVID phase of life. And one trend that's emerged is people are more likely to entertain at home compared to pre-COVID days.
And this has implications for food companies, restaurants, pubs and clubs, liquor groups, etc. Craig Garvin, the chief executive of Australian Vintage, which has brands such as McGuigan, Tempest 2 and Barossa Valley Wine Company, says a new range of pre-mixed cocktails and gin are making strong headway as the company taps into the trend of entertaining at home. Now, it's a result of COVID trauma where people don't want to go out into big crowds. Mr. Garvin told the Financial Review that his company heavily researched the changing patterns in the United Kingdom, where 1/3 of people say they're now more likely to entertain at home rather than go out to a bar or restaurant. He says similar trends are starting to happen in Australia. Now, adding to it is the fact that the cost of living is rising and people are looking for better value. And basically that means cooking at home.
Sean, you are speaking my language with this story. A perfect day for me is a day where I do not have to leave home for any reason whatsoever.
Oh, really? I'm the opposite. I go stir crazy.
Oh, see, I think that's why we are such a good match for this podcast.
Yin and yang.
That's right. Moving on to overseas news, an oil tanker has run aground in Egypt's Suez Canal, briefly blocking the global waterway. Sean, this sounds a little bit familiar.
I reckon I put this in because I think your favourite story was the fact that in March, a huge container ship blocked the canal for 6 days, disrupting global trade for months. You loved that one.
Oh, yeah, that was my favourite story of 2021. It had some stiff competition, but that was an absolute ripper.
It was. Look, now, yesterday wasn't as bad as that. The Singaporean-flagged Affinity 5 vessel had become wedged in a single-lane stretch of the canal. The authority that operates the canal deployed tugboats and managed to refloat the vessel 5 hours later, but you could just imagine the panic.
God, they were just going, oh no, not this again. That's it. I quit. I'm out of here. All right. China's carbon emissions, Sean, fell by nearly 8% in the June quarter compared to a year earlier. That's the sharpest decline in the past decade.
And the benefit of the dramatic slowdown in the world's second largest economy due to lockdowns and the crisis in the property sector. Emissions have fallen in China now, which is the world's biggest emitter, for the past 4 quarters. An unintended consequence, a benefit, in fact, from what's happening in China in terms of the zero tolerance policy.
All right. And Sean, finally, I'll be very interested to hear what you make of this one. A popular Thai YouTuber allegedly cheated thousands of her followers to swindle about $55 million through a foreign exchange trading scam that reportedly promised hefty returns on their investments.
She's known as Nutty to her followers.
Surely that was a warning anyway, right? Just right from the start.
Or perhaps that's a bit of description of her followers. The woman apparently attracted more than 847,000 subscribers to a YouTube channel where she posted dance videos, according to Bloomberg. And she started advertising private courses for aspiring foreign exchange traders on her Instagram account, posting images of what she said were her profits. More than 6,000 people gave her money to invest, lured with promises of returns as much as 35% on their investments, according to the report. And guess what? They lost their money, allegedly.
I actually don't think there's anything that can be said about that.
No.
That's an extraordinary story. All right. Sean, I promised the answer to that question that I asked you earlier.
Susan Ryan, was it?
You locked in Susan Ryan for the 1983 Job Summit, and I am so impressed. You were 100% correct.
Oh, that's luck. That's luck.
Well done.
There weren't many women in government back then. Got to remember that. And Susan Ryan was certainly the highest profile.
Well done. Claim it. Accept that one.
Okay, thank you.
All right. Up next is the Fear and Greed Daily interview. Today you're speaking with Tim Lawless from CoreLogic.
Yes, all about house prices and falling house prices. We also had a great chat about what he thinks will happen going forward. And no one knows the property market as well as Tim, so well worth a listen.
Yeah, it's a ripper. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 2nd of September, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.